And joining me now for all things markets is Peter Cardillo, Chief Market Economist at Rockwell Global Capital. Peter, thanks so much for joining us again.
Good to be back.
So, Peter, Wall Street has been fairly resilient to what's been going on with Washington. A few days down, but overall, the Dow, the hardest hit, down 1.2% for the week. Investors don't seem to be that concerned about what's going on there. Why is that?
Very simple. No one believes that the U.S. is going to default on its obligations, and the bottom line is, the politicians have played this card before. It's just a political theater that they're having right now, and at the very end, whether or not we get a budget, it's not really relevant because we haven't had a budget, 4 or 5 years. The most important thing is to raise the debt ceiling, and the markets are telling us that that's going to happen. I certainly believe it's going to happen. The consequences, if that would happen, if they didn't raise the debt limit, obviously the consequences would be extremely negative.
So you're saying investors for now, whilst they're a little wary about the Washington wrangling flooding over into the debt ceiling debate, that they're pretty confident that Washington will get its act together by October 17th.
Absolutely. In fact, I think, we could probably see the government reopen very shortly. And the reason why I say that is because, there's a lot of rhetoric now that's heating up. And, Mr. Obama canceled his trip to Asia. Yesterday, the House Speaker basically vowed that the United States would never default on its debt. So when you start to hear things like that, and the president not being missing in action, obviously, behind the scenes, I think they're working hard, and I think that we'll probably come to a resolution, and the government will
So you are not
reopen.
Concerned that we will pass that October 17th deadline without a debt ceiling limit?
Not one iota.
No. Okay, but seems as though the markets are somewhat in agreement with you, because you would think that if the U.S.'s credit rating would be in jeopardy, as would be the case should they fail to raise the debt ceiling, that a commodity like gold would soar in reaction. Gold has been down 2% for the week.
That's right. It's been basically in a trading range. And let's look at another market that would certainly be plunging, and that is the debt market.
Right.
I mean, if the markets really thought that we were headed for default, do you think that the yields would be trading at present levels? Absolutely not. I mean, we'd probably be seeing them up at 10 or 15% by now.
Despite all of this, or regardless of all of this, we've had a solid IPO market this week. Shares like Remax listing. We had talk about the Twitter IPO. And we had Potbelly today up 120%. I want to talk a little bit about that. What is so exciting about yet another fast food sandwich shop?
When IPOs are successful, and when you have companies coming to rush them out, that's a good sign for the stock market. Another reason to be bullish, and another reason to think that this quarter is going to be a strong quarter again for stocks.
And third quarter earnings season officially kicks off next week with former Dow component Alcoa. We're also going to have Yum Brands reporting, and towards the end of the week, Wells Fargo and JP Morgan. Are investors just more focused on corporate news right now than they are on government news?
No, I think that they're focused more on corporate news actually, and not the rhetoric, not the charade that's taking place in Washington. But speaking about earnings, I think we're headed for a repeat of what we saw the last quarter. Revenues growth, I think, is going to be skimpy. It's probably not going to be. It's probably going to be worse than last quarter reporting season. But I think on a whole that most companies will beat market expectations. Now, there could be a rise in the quality of earnings. That could be a concern because, companies are mean and lean. And one of the biggest things that the companies have done so far they have not expanded in the labor in hiring. So basically, they're getting more output from their employees, and that's coming to the bottom line.
There have been a lot of cost-cutting measures in place, that's right, and not so much growth in terms of the top line, in terms of revenue. We're going to have to leave it there. We'll see what those third quarter earnings look like next week, and we'll keep everyone posted on that. Thank you so much, Peter Cardillo, Chief Market Economist at Rockwell Global Capital.